Okay, so this is going to be a review of the gold trades that I took and why they failed. They were both losses. So let's go ahead and get into the first position. So to start out, what we were looking at was identifying and classified that this action here at the structural point was a break of structure. And what I failed to see was the fact that this right here, not only was it a break of structure, but we also had an action. We also had an action of mitigation in which we had a price gap, a macro price gap or a daily price gap here, and price mitigated 100% of it. All right. So because of that action and mitigation here, there's two ways we could have classified it. If you saw it as a break of structure, what you can justify or the line of reasoning for this transition here was that, hey, we got a break of structure, but immediately we had a fill of this price gap, and then we got consolidation because the sells and the buys were in a very sensitive region here, and overall the bullish essentially trend here decided to maintain price action to maintain price action and continue the bullish trend. Or you could say that, hey, if you saw this as a liquidity draw, then really the price gap doesn't matter. I mean, you could have taken it, but that would just be icing on the cake and getting a lower entry. But really all we did was shift the structural point here, and then we should be expecting higher pricing. But based off of this trade, how I was seeing it was the break of structure, and then I was looking for the pullback into this macro price gap for the sell side, which was here. Now, the reason why I did not choose this one is because of the idea of uninterrupted price action and taking out structural points. For me, it's one of the key motives or one of the key patterns that I like to see is uninterrupted price action when a inefficiency object is generated. I want to see a liquidity point or structural point taken out when this inefficiency object is created. So because of this green candle here, that caused turbulence in the uninterrupted price action. This automatically invalidates this price gap here for me, according to my trading models, for possible entries or plays. So that's why I saw this price gap here and wanted to play that. And because that had uninterrupted price action, and this is the price gap or the inefficiency that broke structure here, I was looking for plays off of this. Now, immediately, what I did was I used the refinement model in which I see the price gap and then I refine to a specific, candle or another inefficiency object on lower time frames to frame up a precise limit order. And what my original idea happened to be was looking at the 50% to the top side of this green box here of this price gap. And what I ended up seeing was actually, I wanted to assess, I'm sorry, let me back up. I wanted to assess the order flow here based off of, graphical analysis, price action analysis, looking at the candles and seeing how the wicks touch or the bodies touch, etc., and see where the money's flowing. And ultimately what I ended up seeing was that, hey, money's no longer here, it's no longer up here, so on and so forth. What I see is the price gap here. And so I foregone looking at, mitigation of 50% and price respecting it at first to see this 2-hour price gap right here. Ooh. Right there. So this is what I saw initially, and that's what I was going to play. I will say I did see that 50% of the price gap was mitigated, but because of the higher basically price gap here, I said, nah, this isn't going to play out. I want to see a 2-hour mitigated. And so automatically, ultimately, eyes got sore or whatever, and I was like, oh wait, I see price rolling over, maybe I should look for a continuation entry off of mitigation. Maybe price is respecting this because it's not generating any higher highs to press higher. It's actually generating lower lows, so I'll catch the next possible entry. And that's what led me to zooming back out to the 4-hour time frame and saying, hey, okay, if this is the mitigation of that price gap, then I'm going to look for continuation. Lo and behold, what we ended up getting was this green candle, which is my sponsored candle here, engulfing. We had a, break of internal structure here, right? And then that's what led me to looking for the play off of the 4-hour sponsored candle here. Now, I'm going to tell you guys my mistakes on this play. The first one is that I should not care about internal structure breaks in this regard. If I wanted to see this as a valid or a powerful sponsored candle, which is, I guess valid, I would have wanted to see uninterrupted price action to honestly take out this low. And if once price took that low with uninterrupted price action, then I wanted to see price come back up here, and that would have played out most definitely. But because all we did was take out internal structure and internal structure, liquidity here, price, gave a few taps into the sponsored candle, which automatically, from previous experience, it shows like, hey, this is probably not the right play here. It's giving signs that this is going to be pressed through. It's mitigating all the orders every time it taps into it. And so ultimately that ended up failing. So that was the logic and why that particular sponsored candle ended up failing. So that was trade number one. And then trade number two was actually based off of this 2-hour price gap. And ultimately this just ended up failing. And why it ended up failing is when we start going back out to the macro perspective, we have to take into account that the action of mitigation here, if you classify this as a breaker structure, occurred, and then we had consolidation, and ultimately price action took over, transitioning the bulls won instead of the bears, disrespecting the 2-hour price gap here. So we should be expecting potential price to go higher. There is still one last opportunity for sells to hold, which would be, moving into, which is what we have moved into, is 100% of this daily price gap. So if price does hold here and transitions, then yeah, the sells will continue. But if this gets invalidated, in which the stop loss or the invalidation here would be the high of this black candle, then I would be expecting further price action or continuation of the bullish trend to take out the all-time high on gold, supported by the action and mitigation of this price gap here. So if this was a liquidity draw, then this is just action of transition, in which we got a shift of a structural point from here to here, consolidation, and now we're pushing higher. So that's the review on my gold trades. If you have any questions, please ask. Peace.